crypto, the notion that SEC Chairman Gary Gensler is quitting has swept Twitter. John Deaton, an attorney who is in favor of XRP, has responded on the speculation. Recently, District Judge Jed Rakoff of the Southern District of New York dealt a major blow to the verdict in the XRP case. The court has ruled in favor of the SEC in its complaint against Terraform Labs and its creator, Do Kwon, emphatically denying the difference between public and institutional sales that was asserted in the Ripple dispute. John Reed Stark, who brought the court's ruling in Terraform Labs' case to light via Twitter, deserves credit. After Stark, a former SEC attorney in the agency's enforcement division, asked Judge Rakoff to dismiss the SEC's action against Terraform Labs. Rakoff denied the petition. You may recall that attorneys for Terraform Labs and Do Kwon urged the court to toss out the SEC's complaint. The attorneys contended that the assets at issue are not securities and used the Ripple case to support their position. In response, the SEC argued against the Ripple case judge's rationale and stated its intention to appeal the ruling. Since the SEC has jurisdiction and a credible allegation that terrorists bust the Anchor Protocol and Luna may have violated securities laws, Judge Rakoff granted issuer Terraform Labs' move to dismiss the SEC's action. In a strong statement, Judge Rakoff disagreed with the method employed in the Ripple case and specifically criticized Judge Torres' finding. He was critical of the Ripple argument for its focus on public vs. institutional sales. According to him, the Howey test does not take into account a buyer's expectation of profit when purchasing coins, hence all buyers are treated equally. The judge's decision also took aim at the Supreme Court's major questions doctrine, which prevents regulatory bodies from going too far outside their remit. Coinbase and other crypto defendants have utilized this line of defense against the SEC. However, Judge Rakoff ruled that the Bitcoin business does not warrant special protection because of its lack of vast economic and political significance compared to other regulated sectors. Stark emphasized the importance of the ruling by saying that Judge Jed Rakoff is widely considered to be one of the most eminent jurists in the field of securities law in the United States federal courts. The former SEC attorney also praised Rakoff for his reputation as a free thinker. Ripple's et tu, David Schwartz, has voiced his displeasure with the court's judgment, saying that it seems to have relied on specific qualities of Terraform Labs' scheme rather than broad characteristics of cryptocurrency. Schwartz noted that it was not clear that the court's rejection of the Ripple case was based primarily on a disagreement with its rationale. Instead, it depends on the dissimilarities between the two sets of information. He proposed two other readings of the court's ruling. For example, the court found fault with the Ripple ruling for reasons other than its departure from the Howey test. This suggests that the court may not apply or adhere to the Ripple decision. This is the worst possible outcome, according to Schwartz, for those who support Torres' choice. The second way to look at it is that the court's refusal to adopt the argument that it should follow the Ripple judgment in the Terraform Labs case was due to the unique nature of that action, rather than any inconsistency between the Ripple decision and the Howey criteria. In this decision, the court considers that the difference between public and institutional sales may not apply in the Terraform Labs case because of the unique circumstances surrounding the Ripple case. According to Schwartz, this is the most favorable scenario for those who agree with Torres' decision. Attorney John Deaton, a pro-XRP lawyer, has stated that the Securities and Exchange Commission (SEC) actions against the crypto industry are motivated by a larger goal of safeguarding corporate capitalism rather than prioritizing investor protection. Deaton emphasized what he perceives as an assault against cryptocurrencies, especially in connection to the SEC's activities targeting Coinbase and Ripple. He said in his speech focused on a variety of topics, including accredited investor requirements, the SEC's strategy to regulating cryptocurrencies, and its stance on retail investors in the Ripple case. Deaton states his view on X, Twitter, that the United States functions under a framework of corporate capitalism rather than a real, authentic capitalist society. He emphasizes numerous aspects of the current financial environment to support his point. Deaton said that the SEC's allocation of limited resources to Section 5 prosecutions, as well as its emphasis on targeting the secondary market on exchanges rather than combating fraud inside the crypto ecosystem, reveals a wrong set of priorities. He believes that this strategy has the potential to discourage innovation and limit the development of the burgeoning Bitcoin sector. Furthermore, Deaton emphasizes the SEC's hostility to retail investors serving as a mischa curia, friends of the court, in the Ripple case. Deaton's approach implies a reluctance to examine retail investors' perspectives, reinforcing the idea that the regulatory body may favor the interests of bigger financial institutions above those of ordinary investors. Related, blockchain has the potential to save financial institutions $10 billion by 2030, according to Ripple. Deaton raises a significant worry concerning a perceived double standard in crypto legislation. He blames the SEC for failing to engage in discussion with proactive firms such as Coinbase. Simultaneously, SEC Chairman Gary Gensler met many times with Sam Bankman-Fried, the former CEO of the defunct FTX exchange. The differential treatment raises questions about the regulating body's efficacy and impartiality, as well as the overarching structure for digital assets. The SEC's divergent approach to several distinct sector participants might inhibit the establishment of creative startups, while possibly rewarding more established big corporations. In the SEC's complaint against Ripple Labs, Judge Annalisa Torres finally ruled on the parties' summary judgment requests on July 13, 2022. The SEC and Ripple Labs both came out on top in the 34-page ruling, which implied that certain purchases of Ripple's XRP coin constituted securities while others did not. This verdict was applauded by crypto enthusiasts since it seems to indicate that XRP tokens are not securities. As regulatory pressure on the business increases, this verdict might be a major boon. After raising over $1.03 billion through unregistered securities offerings, the SEC filed suit against Ripple and two executives, including co-founder, executive chairman of the board, and former CEO Christian Larson and current CEO Bradley Garlinghouse, in December 2020. The SEC has not been shy about going after Bitcoin firms, but this is their most publicized case to date. Ripple's XRP token was the third most valuable cryptocurrency at the time of the filing, behind Bitcoin and Ethereum. It was widely anticipated that Ripple would put up a formidable battle, given the company's resources. In the end, the institutional sales were completed with high net worth investors like hedge funds, private equity firms, and the like, and on their terms. These companies bought large quantities of XRP tokens from Ripple, and the company used the money to improve the market for XRP and develop uses for XRP's ledger. The court noted how far Ripple had gone to sell XRP, and how it seemed to link the price of the coin to the company's own efforts. Ripple's claims that the buyers intended to use the tokens as currency or for some other consumptive purpose were rejected by the judge, who pointed to lockup provisions and or resale restrictions in the sale agreements as evidence. On the contrary, the judge concluded that all parties understood the sale of XRP to be an investment in Ripple's efforts. The judge seemed to be persuaded by the SEC's argument that the institutional sales were an unregistered securities since they met all four prongs of the Howey test. When it came to the programmatic sales, however, Judge Torres sided with Ripple. Ripple used standard bid, ask transactions on several exchanges to unload a part of its XRP holdings. Neither Ripple nor the purchasers were aware that they were really buying the tokens from Ripple. The judge's decision relied heavily on this detail. Programmatic buyers did not know who the seller was and could not have been directly investing in Ripple's future efforts, in contrast to institutional buyers who knew they were purchasing from Ripple and were ultimately investing in Ripple's future efforts. The judge reasoned that purchasers of XRP tokens can be motivated by factors unrelated to Ripple, such as the overall volatility of the cryptocurrency market. It was also implied in SEC filings that many programmatic buyers were entirely unaware of Ripple's existence. Judge Torres' decision shows that the XRP coin itself is not a security, especially in light of the split. The verdict caused a sharp increase in the price of XRP, since most of the largest cryptocurrency exchanges have restored the token's trading capabilities. This decision seems to imply that, barring specific subjective expectations of buyers and sellers, most tokens are not inherently deemed securities. The business world applauded the outcome. The judge found that the distributions in the third category, which included tokens given to Ripple personnel as part of pay packages and to third parties as part of efforts to expand the XRP ecosystem, did not meet the first prong of the Howey test. The SEC has already signaled its intent to file an appeal of the decision. According to a court document the SEC filed on July 21, 2023, in its case against Terraform Labs. Those portions of Ripple were wrongly decided, and this court should not follow them. This was in reference to the programmatic sales. A further statement from the SEC reads, Ripple conflicts with and adds baseless requirements to HAWA and its progeny.